Well, it's been another fraught week on the markets. Let's see how things finished up. Over to Jayne Edwards.
Alan, it wasn't a good end to the week on Wall Street, and we should brace for a difficult day on our local market tomorrow after the US indices lost 1.5% on Friday and the Nasdaq slumped to its lowest level this year. Investors capitulated after a week of mixed economic news, which finished with disappointing Chinese trade data and continuing worries about Greece's debt. China still posted a massive trade surplus in May, but it was well short of expectations, leaving investors fretting about the outlook for global growth. In commodities trade, the oil price slipped after reports Saudi Arabia planned to boost supply, while metals prices slumped on the Chinese trade data. With a clutch of US economic reports out next week, analysts are tipping further falls in the share market. Looking at world markets, US shares posted their sixth week in the red. The UK and Europe lost another 2%. Japan was steady and Australia stayed in the doldrums. With more on that, here's Marcus Padley.
Well, we're still stuck in our 20% trading range, the range we've been in for about 18 months now, although it does look like we're heading from top to bottom at the moment rather than bottom to top. We saw the RBA leave interest rates unchanged this week, although the comments with the meeting did tend to push out expectations for the next interest rate rise, at least beyond the next CPI numbers due on July the 28th. Some good stories and bad stories this week. Good stories were outnumbered by the bad stories. They included Metcash, which was up after their results. They weren't dazzling, but they do have a dividend coming up and they are a big income stock. Iluka was up after announcing a 75% increase in titanium dioxide prices and a 35 to 40% increase in zircon prices. Sigma Pharmaceuticals was up after their AGM. We saw Miso blast up after some favourable clinical phase 2 trials. Territory Resources was up after a counter bid for the company. Stocks going down included Tabcorp, which split off their casinos business, Echo Entertainment. If you add the two together at the end of the week, they're down about 3% on what they were before the split. The Australian Agricultural Company had to have a small profit downgrade to take account of the new livestock ban, but the share price pretty much survived. Newcrest was down after cutting production numbers. Macquarie was down after a fairly high-profile sell recommendation was put on the stock by Citibank. They also cut their target price from $38 down to $30.50. We saw Paladin, which is down 50% since January, fall again this week as they had to deny stories of a capital raising and that Newmont Mining was looking to sell their stake. We saw Fairfax down after a strategic review, which included selling non-core assets. Indophil Resources was down after a $189 million capital raising. And we saw Gloucester Coal, which again is down 38% since January. They fell again this week after announcing an 85% shortfall on the retail component of their recent entitlement issue. Winner of the week this week was Coffee International, up 39% after a strategic review under their new managing director. That stock's coming off a 9-year low. And loser of the week was Hasty Group, down 27% after announcing a deal with their lenders to restructure debt ahead of a recapitalisation.